Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming to you with the market recap. It is Friday, the 26th of April. We have made it through another week, and to probably not many surprises, another bullish week overall in the market as we continue to work through a very busy earnings season. And hey, Thiago, good to see you, my friend. Hope you're doing well. Hope you had a great day both in and out of the market and have an exciting weekend planned. It's draft weekend for me. So one of my favorite weekends of the year. I've got an exciting weekend planned. So one of those days, where for the most part, kind of more a little bit kind of what we would expect. We did see some selling in energy as Exxon and Chevron just kind of missed the mark. We're going to have quite a few earnings, coming out really everywhere, but plenty of energy companies coming out next week with earnings. So it might be an interesting week over there. But we have over 150 S&P 500 companies set to report next week. We saw a continued fight back in healthcare. We're approaching that resistance level. That's going to be an interesting one. Lots going on over there. Yeah, did Amazon come out with kind of a okay earnings report? Really kind of had a hard time getting going. But at the end of the trading day, the last hour and a half, and hey there, Patricia, hi Matthias, good to see you, Marie, and Demand Prosperity. How are you? I don't know what you're. I know I talked to you. I saw you in the halftime show. But I know your name's not Demand, so welcome, of course. We really had a really strong last hour and a half in the market. Here you see on the S&P a real strong run just below that resistance to end the day. I'm looking ahead to next week on the earnings side of things. Apple, Google, they're going to get the headlines. They're going to get the attention, and probably rightfully so. Okay, there we go. Jasari, good to see you. Yeah, I talked to Jasari on, I guess, probably would have been Wednesday or maybe Tuesday morning. Well, welcome, my friend. Apple, Google, the big ones, but MasterCard, Pfizer, McDonald's, Merck, Eli Lilly, Amgen, some very large companies. Just taking a quick peek to next week over in the energy sector. Of course, on the FinViz, they kind of mix basic materials and energy together. A lot of energy stocks, pretty much everything except for Dow DuPont coming out. So that's over 14. That looks like 14 S&P companies in the energy sector. Chevron, Exxon got us started off maybe on the wrong foot, but there's still time to recover. Over in the consumer staple side of things, GM, Mondelez, of course, Apple, plenty of big names coming out over there. Healthcare is, financials are real quick, lots of REITs, not a ton of financials, lots of REITs though. Well, we have some, of course, MasterCard. We've got a few of the insurance companies like MetLife and Willis Tower coming out, but very REIT heavy next week as well. Lots in the healthcare sector, over 20 S&P 500 company healthcare stocks. So that's going to be an interesting one with kind of the way that sector has been behaving as well. On the industrial goods side of things, not quite as many, but some decent sized names, CMI, General Electric, AOS. So some interesting names over there. Technology, plenty, well over 20 in there as well. Qualcomm, ADP, of course, Google, Activision, Blizzard, to name a few. Some of those are tech. Some of those are going to be, of course, communication services. And of course, in our discretionary area, McDonald's, probably the big one coming out, but lots and lots and lots of earnings. As I was going through my scanning today, as I do every Friday for next week, I would say I probably eliminated at least 60% of the setups that I found that I thought were worth following because earnings were either next week or the first half or so of the following week. So, I mean, it is just, we are still in earnings season, like it or not, I guess it depends on who you ask. So very strong close though. As we take a look at the S&P 500, very strong close, a lot of buying towards the end of the trading day, just hanging out right below that resistance. Boy, we got a pullback, but it wasn't very much. It was intraday 9 EMA and then resume right back up to that old resistance level. We're still knocking on the door. Haven't been able to break out just yet, but we sure are trying to do that, it looks like. Over in the Dow, a little bit of a deeper pullback, simply because it didn't run all the way back to resistance today, but sitting right in between that rising 20, closing above that 9 exponential moving average. So still looking pretty bullish as we're working into next week in the Dow Jones as well. Got a little bit more room between here and that resistance level on the Dow. NASDAQ, again, right off of that intraday 9, happened quick, but we sold into that intraday 9, and at least for one more day, traders say, nope, this is too strong for us to pass up on, and well, closing in the green yet again. So I mean, just more bullish activity, still fighting with those resistance levels in the S&P, in the Dow Jones, although we have a little bit of room, and here in the rut too, still in this sideways range, back and forth, back and forth. Realistically, you know, in my mind, as we kind of talked, several times, but specifically yesterday, staying in this range would be fantastic. It can do that as long as it would like to do so. A break and a close, I should say, on either side, I think is a pretty interesting signal. Until that happens, I'll continue to just hope it stays in this range for another day. At least for me, but nothing really has changed. 1605 for resistance on my end on the Russell. Pretty strong buy signal. If we break above that, in my opinion, that is quite a bit that we would be breaking through, along with a nice psychological number in 1600. On the bottom side of things, probably about 1560 or thereabout for support. So really not a lot changed, but we did see some good bullish activity today for the most part. And we, anytime you're closing right at resistance, it's definitely a day where folks were willing to put some money out there. We're all kind of just waiting for the first person to get us through that resistance level, right? So as we move into the sectors, a little bit of a bounce back day over in the material sector, very much like the overall market. Need to see a little bit of upward movement before I'm terribly sold on this for jumping right into trades within this space here next week. But I do believe that if it has some upward momentum, that will confirm that this trend is still very much intact. We're still making those higher highs and higher lows. So I'm still looking for that bullish activity going into next week within this space. Just not quite. I don't love that we're kind of sitting right below those averages, and maybe that's me just being a little too conservative. Very well could be, but as long as we're holding this 50, I'm definitely looking still through bullish eyes. Of course, that's the 50-day moving average, the old resistance, and I still wouldn't even necessarily be looking bearish if we were to break that, just probably not quite so bullish. I think we're getting a very nice retracement opportunity in the material sector. The only question is am I going to get the nice signals? I do think I need at least a little upward movement on Monday to start feeling a little bit more confident that, yeah, we're ready to make another run up at that resistance up there at 58. So we will see where this one takes us. I probably need one more day on that chart at least. And hey, Marcelo, good to see you, my friend. Over in energy, interesting day. We gapped down on the open. You had Exxon and Chevron. I mean, they did not do any favors for this sector here today. Now, you did have Exxon hold support, closing right at that 50-day moving average, what at least put up a fight off of that earnings gap. It wasn't a great report in my mind, but it was what it was. Chevron as well, pretty report, and really broke down. A little bit of a bounce back towards the end of the day, and we saw that in the energy ETF. We really kind of closed here. I don't love that we find ourselves back in this trading range. A clean close below the 50. I was ready midway through the day to put this kind of back into that neutral range that it had been in for quite some time. With the hammer and the end of the day momentum, feeling a little bit better about it. Towards our second part of the day, we really finished strong over in the energy sector here too. Now we've got some earnings, maybe not as big name. They're not the big names that Exxon and Chevron are, but there's lots of medium-sized names in the energy sector reporting next week, as we saw. I'd like to push us back above that 67. This could just be an ugly pullback. Again, we talked about this, and we've seen it specifically on energy during earnings season. I mean, when it's a very one-sided day, right? We've seen it on the upside and on the downside already, this earnings season. When it's very one-sided within that sector on any given day, it can really drag it along with it, right? And, at least in part, I think that might be a little bit of what happened here today in the energy sector. It's going to have to probably get back above 67 for me to be, interested in any new energy trades. I still don't think there's clear bearish signals. Definitely think you could make a case there's some more neutral signals. It doesn't really matter how we got here. We are back within this old, trading range between 65 and 67, and so I did step back a little bit on my rankings of energy this week, but not to the point where I am bearish. Just a little more, still bullish with with a little bit of neutrality thrown in. We'll see where this one goes. Upward movement, I think getting back above 67 could be very interesting. I'm not going to let it scare me off. We've watched how bad behaved this whole energy run has been, and so I'm not going to let it scare me too much. Now, if we break below that 65, that's a much different story. In my mind, that is a pretty clear bearish signal if we do end up working down and breaking that $65 mark. I don't expect that to happen, but I will be mentally and of course mentally prepared just in case. On the other side of things, we really had a nice break on the financial sector here today. Wanted to sneak into some of the big names in this sector. Things are looking good. We've been watching that break for a little while. Berkshire Hathaway, really nice move to the upside. JP Morgan knocking on the door of resistance after that nice gap up on earnings. Bank of America breaking out of a little high base here today. Wells Fargo, maybe not quite as pretty, but had a good day. Citigroup, really nice looking chart on Citigroup. I thought nice little retracement to that 9 EMA, a little bit of a doji type candle yesterday, and some nice upward movement here today. So, AXP, how could we forget you guys? Nice breakout going on over in American Express. I think this is a good, solid looking sector right now. Personally, not a ton. And hey, Whitney, not a ton of names coming out in the financial sector for earnings next week. Like we saw more of the real estate type of companies going on in the financial / real estate space. So I like it. I think this is a good solid signal. This is a pretty historic level. Well, historic, maybe that's a little dramatic, but a pretty major level of resistance in my mind. That was a major pivot point. Unlike things like the Dow, the S&P that kind of took their version of that out a while back, we've not been able to do that. So I'm definitely interpreting this as a nice bullish signal, even leading the market, right? S&P still not able to break out. We were breaking out in the financial sector, right out of the gates here today. So I'm really liking where that sector is. I'm also really liking the bounce back day that we saw in the industrial sector. We did see those earnings really beat our ETF up yesterday, pushing us right back down into that 77 range that we've been keeping such a close eye on, both as resistance, and potential breakout point. Little bit of a bounce back day over there. That makes me feel a lot better than I did yesterday. We looked at some of those charts and they're not particularly appealing to me, at least, but doesn't need to be me. It just needs to be somebody buying them, right? It just doesn't have to be me doing that. Really like that we showed some fight back here at that 77 area where we should have, at least from a pure technical perspective. So I'm still liking this as a pullback opportunity. Don't think it's quite confirmed yet. Think we're going to need some upward movement here early next week for that confirmation. But that is what I am going to be looking for going into next week. I'm going to treat it like it's an ugly pullback. I'm not going to try to mess around with some of the stocks that took tremendous beatings and drug us down. But you're going to have things like John Deere, had a really nice, actually has a little bit of room, really nice upward movement here today in this upward trend. So there's still things in this area that I personally like. I feel a lot better with today's price action. Still a little cautious because of, we saw those big names, and well, they've not been that impressive yet thus far through earnings. But I think that is a good step in the right direction. Looking at this as a pullback opportunity going into the first couple of days here next week. Over in tech, a little bit of downward movement, but of course closed out at a nice hammer candlestick. I think you really have to like the way this looks. Now we have lots of big names coming out, as we saw in the tech sector here next week. So we'll definitely have to keep an eye on that. But a hammer candlestick off of a pullback, it was shallow, but I mean, it was a pullback. Might not be a textbook bullish retracement, but we did pull back. Very strong upward movement. If we can show some follow through on Monday off of this candlestick, I think I'm going to like the way that looks from a bullish point of view. At this point in time, I think you just have to go with the trend and say, I'm looking for reasons to get in. And well, we've not had any pullbacks. This is the closest thing that we've got since our decent pullback that happened all the way back in March now. So I am looking at this as a pullback opportunity. Again, let's see how we open on Monday. Can we push through this intraday high? That will be important. We'll have to keep an eye on those earnings because, well, yeah, we know that they can impact it, but this is as close as we've got to a pullback within this sector for a month now. So if this is something that's interesting to me, got to be willing to take advantage of it. And if it's a little too aggressive, that's okay too, right? Nothing wrong with getting exactly what you want. And here's another hammer from yesterday. We saw this hammer on the staples sector yesterday. Ton of follow through here today off of that hammer. Those hammer candlesticks really are strong signals in my mind, especially if they're at places that make sense at the moving average, at the old resistance or support level. In this particular case, shows a lot of oomph coming into the close, right? By the formation of that handle on that hammer candlestick. We're now approaching this resistance. On a positive note, it was a great day over here. And I do have faith that we're going to take out this resistance level, but we haven't done it yet. And so something I'll definitely be keeping an eye on going into the first part of next week. The only thing I know with absolute certainty is it caused us some trouble in the past. It was the catalyst for our little retracement here this past week. So do think it's wise to respect it. I do also think it's wise to prepare for a break if it does in fact break to the upside. Of course, looking at the weekly chart, if we can break through that resistance level, I mean, there's really not a lot until we work up into that $58 range. And as we've talked many times before, many of the companies, at least to my eyes within this space, continue to look very, very attractive from a bullish point of view. So I'm going to like it. I do want to see it break. A great day here today, though, coming off of that hammer candlestick on that breakout point, no doubt about it. Utilities had an interesting day. It really looked like they were. I was thinking, man, I guess I should have trusted that, 57 test. I don't really regret it, but I was thinking it. I'd be lying. But it really sold off of the top here today, as you can kind of see, running all the way, gapping up and then really just struggling off of that. So, it continues for me just to be in a, bullish sideways area. Again, as I've said many times, anything above 57, I can't get behind the bearish argument personally. I understand the bullish argument as long as it's kind of within your personal rules and systems, but I really am treating it as if it is sideways because, quite honestly, that's what I think it is. I think after this nice run to the upside, we find ourselves in an extended consolidation period. And until we come out of that, I'm probably going to be saying much of the same thing, although we came close to thinking about trying that resistance here today. If we can close above 59, that would be a good signal for the extension of that trend in my mind. If we close below 57, that might show exhaustion of this trend. I just think you have to be patient unless, as a buy and holder getting this, nice dividends on these utility stocks, say not a big deal, right? But as a swing trader, utilities, at least for me, aren't generally great swing trading instruments. I want to have very clean signals, for those short-term trades if I'm going to try to play utilities that way. But definitely an interesting day of price action. Speaking of which, we're now running into, and I think we have to go to our weekly chart here to really see this. We're now working in to that test. I mean, this was a really good bounce back week for the healthcare sector. Now, I don't think it did enough to make me forgive it for this break to the downside. I expect that this area should act as a resistance catalyst. We've got weekly moving averages, sitting right on top of it. We of course have that old support level at approximately $89. However, we've yet to see any sell signals develop, and quite honestly, we've seen at least some, in my opinion, bullish signals, at least short-term, develop. The close above that 9 EMA. That 9 EMA is now going up instead of going down, showing a little more fight than maybe we expected, and certainly more than I expected it to, at least this fast. Personally, don't think we've had that main challenge. I think that is right up here. We've got a lot. If we can break back above that 20, that would be another bullish signal. The way I'm going to be looking at this is, I'm not opposed if we can get back through that 89 to looking at things showing strength. And probably the best example of that for me, at least right now, would be something like a Johnson & Johnson. If I can, if we do push through, show a few more buy signals in the healthcare sector, now, I'm not going to, say no way to it, but I'm going to be trading into things that at least I think are showing good relative strength, nice, clean potential breakout candidate here. So even if you forget about the sector, at least I think this is a nice, clean potential breakout candidate here. So I still am looking for retracements, but the simple truth is there are a lot of names coming out with earnings in healthcare next week. And so I will probably not be looking to do a whole lot because of that. But technically, I think this is, this 89, 89.20 ballpark where we have all those weekly moving averages, that old pivot point, the old breakdown point, that should be a tough technical battle. And if we're able to continue this momentum that we've developed, and I have my doubts, but it doesn't mean that I'm right, then that should be a place where we struggle. If we just push right through it, I think you have to take at least a little bit of the bearish bias off of it. Not enough to completely switch around for me, but enough to, okay, I'm all right with that. A lot of the retracements are still out there within the sector, but many of them have just worked back and are showing some short-term buy signals, like closing above the previous old support breakdown point, closing above these short-term averages. So this one is a little tough read right now. I can't really get behind buying it yet, but it's showing more strength than I think maybe it should if we're looking at it from a bearish point of view. Certainly if we get above that 89, 89 and a quarter, I will feel that way. Over in discretionary, good solid day. It took a while for Amazon to get going here this morning. They had a very muted response to their earnings report. That was just, I think probably, average, nothing bad or anything like that. But really had a tough time getting going. But the second part of the trading day finally broke to the upside, had a pretty nice little run from there. Of course, they're a big player within this space, no doubt about it. You had Starbucks, very similar situation over here as well. Very muted response to the earnings, really dipped down. But this candle here on Starbucks is very bullish in my mind. So they come out with earnings, and again, great, terrible, I don't know. I don't think they were terrible by any means. I don't think they were rock star earnings either, though, but really dip on the open. Well, I'm gonna have to switch into something like a 15-minute chart here. First response is yuck, right? Everybody's selling it, and then zoop, everybody says, well, that's dumb. What are you doing that for? So we really create that nice long tail closing near the top at an all-time high. Let's just steal this and put this over here to save you all the hassle of watching me try to draw a straight line. I think that's a very strong signal personally going into next week as far as the technicals are concerned. you guys know where my head has been. It continues to be so over in the discretionary space, one of my favorite areas, and we'll probably, until it starts to, until it's below 118, probably going to keep saying that. I do think 118 can be our primary support level at this point, old breakout point, 20-day moving average. And again, it wasn't much, but we did see upward movement off of this little tiny pullback, right? And so I think you have to continue to like this area going into next week. REITs, yeah, they did close above that resistance or that potential resistance zone here today, right below that 20-day moving average. With all of those earnings and the uncertainty, and I was seeing things just scanning. I don't know how they closed. I was looking at real estate earlier in the day, but I was finding a lot of things that looked like, here in the real estate area. Now, there are things that look better, but I was seeing quite a few of these REITs that have kind of worked into old support / moving averages that should be, areas that, I don't want to buy there. Maybe I don't want to go short, but I don't want to go long in something that looks like that. I saw a lot of them looking very, very similar there. Still have some areas that aren't doing, quite, aren't dealing with quite the levels of resistance. Prologis, probably my favorite REIT to work with, although again, I'm not a huge REIT guy when it comes to trading. So there are things out there that are showing some decent strength, but between kind of the overall resistance that some of these stocks within this sector are working with, lots of earnings coming out anyway, probably in my mind a week to just let the real estate sector figure itself out. We'll see where we find ourselves next week after all of those earnings come through. At least that is what I'm planning on going into next week. And of course, over in communication services, pretty decent little day over here. Facebook still pulling back a little bit off of its earnings gap, but again, nice hammer candlestick here today. That's a fairly bullish looking candle, a little scarier trade than I like. A hammer at old resistance is a lot more comfortable, or at a moving average, than kind of in no man's land, which we find ourselves in here, but pretty bullish looking development. Of course, you have Google with earnings next week. That's the big one. But you have some of the other video game companies. I know Activision Blizzard is, because they're the only video game company I actually track other than to kind of point at and scorn people when they trade EA because I'm not a fan, and I know I'm very biased, so I don't mess around with it either. So, but it just continues to be a pretty solid area. Again, we'll have some earnings in this space next week as well, but we're still, kind of just marching up towards, kind of the second to last potential resistance catalyst in the ETF at least. So let's see how these earnings go. I mean, obviously, Google will have a very important impact. If Google can have a nice earnings report, it doesn't have to be a, nice gap up like Facebook, probably a good sign for this ETF going into the next quarter. So, there we find ourselves after just another bullish end. I mean, it just kind of comes down to, you look at the S&P 500 and sometimes any given moment you might think, yeah, this is where it's going to pull back. And then you look at it on a weekly chart and just yet another close, another big green, weekly candle here, which is what we've seen for the most part in the S&P. We're still fighting a resistance. That is something that until it's gone is going to be concerning traders. Not obviously, at least right now, not very much. They're still more than happy to buy into things. Lots of earnings yet to come. So, next week, very, very heavy on earnings. There is no doubt about that. So that might have an impact one way or the other. So there we find ourselves from a sector point of view. Not a whole lot to see here over in the VIX, just kind of hanging around as traders just seem like we're just all waiting for it to break. Or generally feels like all of us just assume it's going to break and we're just waiting for that to happen. I don't know if we're right to be thinking that or not, but that's the feel I get. Over in the dollar, a little bit of back and forth day off of this nice breakout. Certainly, the only thing I'm looking at this as is every day that we're above this breakout is just a little bit more of a signal going into the next month to 3 months. Not specifically tomorrow. A little bit of a pullback to that breakout point would be nice if we're able to get that. But I really, much like a lot of other traders, think that this break above this resistance level is an important break and does lead to a potential bullish run throughout the months to come. And so every day it's above that makes me feel that much more comfortable personally. So still liking where it's at personally, and I think most traders would agree with that. We saw some really nice bounce back, and it's been weird. We talked about a lot these metals breaks. They just kind of hovered below their breakdown points. Over on gold, a pretty strong day, working all the way into that falling, and now it's kind of even flattening out 20-day moving average. You still have to be a lot braver than me to want to buy this chart. At the very least, it's got to take out this downward trend. I think a really easy rule of thumb is to have a trading rule that says if it's not breaking resistance, don't buy it. And that is my personal philosophy. So it's got some work to do before I would get on board. But you have to appreciate that we're back over here. And we never broke down so much that I think you have to call this a breakdown. If we look at the weekly, it's not how you open, it's how you close, right? We say that all the time. Now there's stuff, there's all sorts of things, and that's what happens when you break down, right? You've got lots of levels of resistance in the form of moving averages, trend lines, previous price points. So we've got lots of work to do. I think a pullback into that trend line could be moderately interesting from a bearish point of view, and I still lean that way if you made me do anything. But waiting, I guess, is probably the best way to put it right now. Let's see what happens if we get into one of these pinchy type of situations where support stays the same horizontally, the resistance continues to get lower, lower, lower. We can break out of that pattern. Might be talking, because much like many other traders at Tackle Trading, I'd much rather look to be a buyer in gold than a seller in gold, all things being equal. Now, I'll always listen to the chart, because of course you always listen to the chart. The chart's smarter than you, right? But I'd be lying if I said I wasn't like so many other people here at Tackle Trading, that we like gold. We believe in gold long term. Whoops, there we go. Let's see if I can just not steal that, or maybe it's a sign. So for me, not really a whole lot to see here. Back below here, maybe a breakdown point, but it's definitely put up more of a fight and a very strong day here today. Now, my expectations are if the dollar is going to run in the months to come off of that breakout, then ultimately the pressure is going to be a little too much on gold. But we will see where we go. But right now, I don't think great trading opportunities. If I'm thinking about a short, it's not today. If I'm thinking about a buy, it's just got way too many things in my mind that can be the resistance catalyst to have a big red day as early as tomorrow. So still leaving that one alone myself. Silver, a little more interesting. I think you can make at least a little bit of a stronger bullish case on silver than gold from a technical perspective. I don't know why I can't move my chart here. All of a sudden it's being grumpy. Well, let's go to the weekly chart, because this is kind of an interesting development. We've got that falling trend line. We are right there here today. Again, just like gold, there's going to be lots of little things or maybe big things, depending on what you think about these different moving averages and support levels from days gone by. But if we can close that trend line and carry that momentum, and again, you guys know me, I think maybe an aggressive trader would say, Frank, we did. You guys know me, I'm not there yet. Show me some upward movement, then we can talk. There really isn't a lot. If we can break this resistance level, I mean, we're taking out the trend. We don't really have a lot of resistance until 15.25, at which point we do have a pivot. We do have the 50-day moving average. So I'm not there yet. I still think if we kind of get caught up in this little pinch and break to the downside, that is a much, much, much better technical signal. I just don't know that I'm going to get that, just yet. This was a decent little development for potential silver buyers in my mind. Still way too aggressive for my taste. Not the guy that's going to be jumping in here by any stretch of the imagination. But if I'm bearish on silver, I'm calling this a bullish signal. Enough to change my tune? Probably not. but I am calling it a little bit of a bullish signal. I didn't want to see it go that way if I am in a bearish position on silver right now, still waiting for a good signal, and we've just not really had it with the way it's developed. And of course, over in natural gas, kind of, I mean, this is one of those tough calls. I don't think you can call this a break. I think with the closing back above 250, looking at the weekly chart, I think we're just having the battle at support. So I don't think this is decided yet, to be quite honest with you. I don't think that you can clearly say that we're going to fail this break, or we're going to bounce off of this support level. Don't think we got enough information this week. I will say this, though, if you look at the daily chart, it's just a little thing. It's just one thing, but a close above that 9 EMA that's starting to flatten out and turn from moving down to moving up. That will be the first close in a while above that 9 EMA off of that support zone. Again, way too aggressive. But if I was a very aggressive trader wanting to buy natural gas off of that 250 support zone, this is a signal that would really catch my eye. I'm just way too wimpy to be that aggressive. I think our signal to the downside, as we've kind of talked the last few days, is going to be a break of these lows. So if I'm looking at natural gas to build into a bearish position, I'm waiting for these intraday lows to break down as the confirmation signal. If I'm a buyer betting on that support, well, it's a longer term trade. And so I'm probably not thinking of every little thing. But if we can work through these moving averages, again, if we can get back above this old resistance level, might be something there. I mean, that's going to be hard. That's a tough break in my mind, but that doesn't mean it can't happen. So I think we definitely need a little more time to get clear signals one way or the other for any swing trades, at least over in natural gas personally. And crude, definitely the most interesting commodity here today. We took out that. This was an interesting one from a technical point of view. I thought we kind of worked into that old support level. Right, that old resistance level / 200-day or 200 hourly moving average. We saw some buying come off of it before completely throwing in the towel and filling up all of that space very, very, very quickly. It's not a great day for crude here today. Now, where we did close is we kind of worked back into that old resistance level, and we're doing that dance right now. I don't know that I know for me, I need one more day. Overall, I'm still looking at this more as a pullback opportunity than anything else. I don't think it's wise to say that this is a breakdown, at least just yet. But I could understand if it's scaring some bulls away. I really, really could. This is the first real, oomph to the downside we've seen in a little while on crude. So I understand if folks are getting, taking some profits or, going to be a little more patient with it. Nothing at all wrong with that. If we continue and take out this low, there's lots, again, it's tough to say that that's a clear bearish signal. I guess you could, potentially do so, especially if we kind of run up a little bit into this resistance and then break it down. Then maybe we can have a little different conversation. That might look like a little bit of a head and shoulders pattern, but that's still looking ahead. I don't know that we've broke yet. I think we're right there on that door. I would have liked it better to close above 63. I would have felt a little bit better about it, but I don't personally feel there's enough information to change the bias in crude. I'm still looking at this as a pullback opportunity going into next week. It's not on Monday. Whenever it is not on Monday. So we will see where this one takes us. But the 63 zone is something to keep an eye on. Realistically speaking, our next price point is really down here in that 60, 50 range. We've got the 200, we've got the rising 50. So there's still lots to prop us up. But I do expect if we fail here and we continue to push down, we probably will see at least a little bit more selling before buyers say, yeah, this is a nice enough pullback to get in. So a little more selling than certainly we have been accustomed to over in crude here today. There is no doubt about it. Maybe we're just spoiled. I don't know. But for me, still overall looking at it as a pullback opportunity. How it responds to this 63 ballpark in the next couple of trading days will be important to me. So that is our, of course, our commodities and our dollar here. Before I let you guys get out of here for the week, a couple things really jumped out to me as I was kind of scanning through things for the market. Number one, there's a ton of earnings coming out next week. Like I said, I didn't really keep the math, but lots of I kicked out a lot of potential trade candidates as I was going through it. I kind of talked before, I'll kind of do my view of the charts. They're interesting, I'll throw them in this list, then I'll go into this list and actually put together kind of a quick bird's eye trade. Then okay, that passes the test, then I'll go check the earnings date. So as I was kind of working through it, that was the number one thing that I noticed. Lots and lots of things out there. Some interesting things over in the consumers goods. Had Campbell a little bit of a bounce back day. Got MKC with the potential breakout, and yeah, maybe somebody could call that a pullback, but we're hanging out at some resistance levels. I really like the way that the Citigroup chart was looking, and it certainly carried strength going into the next day. I do like the Johnson & Johnson as well, but what I really noticed was I was just kicking things out and out, because there was just either, if it wasn't next week, it was the following week. And from a directional trader's perspective, that is normal. If you're not holding through earnings, and as you guys know, I certainly do not hold directional trades through earnings for any reason whatsoever. If they're swing trades, they're not for earnings. It really kind of, it really sunk in. Maybe my favorite looking chart this week was C-Trip here, though. Have a nice little consistent downward trend going on this pullback. Has not been able to break back above that overall within an upward trend. I thought this was a really interesting chart going into the week, at least personally. I like Baba too. It had a nice little breakout development going on. So there are things out there, guys. It's just not as many as maybe we want there to be, from a directional point of view. But again, that is just life of earnings season for directional traders. And that's why, either take a little break or do some volatility earnings trading. Don't stress it, because it's the same for everybody. Right. So, ladies and gentlemen, that is going to do the market recap for the day and for the week. But as always, it is great to have you with me. Thank you for sitting in with me, going through the routine. Always more fun to do this with you guys than on my own. I guess I'm going to head on over to the scouting report, see what kind of shenanigans the other coaches are getting up to. What I'll probably do is go derail it. That's usually what happens. So they're moving along quickly, and then I get in there. But we'll see how that goes. We'll, of course, get you those scouting reports here going into tomorrow. There are definitely some interesting candidates out there, but there's a lot of interesting trade candidates out there that just disqualified for earnings. And I don't love it. I mean, I'm used to it, and it is what it is, but I will always complain about it to anybody that will listen. So, hey, you guys have a great weekend. Of course, if you're new around here, do be sure to subscribe to the channel and smack that notification bell. Join us over on Twitter. You're always welcome to come hang out with Team Tackle over there, at Tackle Trading, at Frank Martin 23 for me. If you are looking for me, let's see, anything else? Oh yeah, I'll do my solicitation for likes. If you enjoy the market recap, it is helpful and appreciated if you do give it a thumbs up. Always helps get the message out there. Hey, thank you, Matthias. You have a great weekend too, everybody. It's been a pleasure as always. Have a wonderful weekend. Have some fun. Do some of the things you love with the people you love. Get through the newsletter. Get through those reports on Sunday, so you're ready to rock and roll on Monday. We'll do it all over again. So thanks so much, guys. You guys have a fantastic weekend. Get out of here. I'll see you on Monday.